Okay, welcome back. Welcome back for our final session, sort of all but final session. We have one more at the end of the day about the Santa Clara community, but we have a terrific talk now from John Denniston. Our respondent to John today will be Ann Skeet, the Director of Leadership Ethics at the Markkula Center for Applied Ethics here at Santa Clara University. And to introduce John, I'd like to invite Ken Manister, Professor of Law at the Santa Clara University School of Law, Presidential Professor of Ethics and the Common Good here at Santa Clara, and a member of our organizing committee for the conference, to please come to the stage. Ken.
Thank you, David. A question worth our attention today is this. Do Pope Francis, and by extension Laudato Si, simply not understand the free market economy and all of its many benefits? It's important to consider this question now because on the one hand, a small group of powerful Americans has made this criticism. And on the other hand, because the response to the challenge of climate change must involve markets somehow. Silicon Valley certainly would not have it any other way. Nor would the millions of poor men and women around the world who depend on well-functioning markets to feed their families. We're very grateful to have with us today former venture capitalist John Denniston to respond to this criticism. His very careful reading of Laudato Si, of course, will inform his response, and perhaps we could say that such a careful reading is all that one would need to engage the criticisms now afoot. But Mr. Denniston also brings a great range of practical wisdom to this task. For many years, he was partner at the noted Silicon Valley venture capital firm Kleiner, Perkins, Caufield, and Byers. While there, he co-founded and co-directed the firm's Green Growth Fund. He also has worked in venture capital and technology investing with major banks, law firms, and cutting-edge energy companies. But Mr. Denniston has paired such work on the leading edge of finance and technology with work in markets for marginalized people. As president of the San Mateo County chapter of the St. Vincent de Paul Society, he has backed the Catalyst program, which aims to expand the number of local jobs that pay a living wage. He is also the chairman of the board of a social impact company called Shared X that aims to improve agricultural productivity in Latin America. The company has three aims: to produce attractive returns for its investors, to lift people in small farming out of poverty, and to develop a model for sustainable agricultural practices that can be replicated around the world. For his work with marginalized communities, Mr. Denniston received an honorary degree from the Dominican School of Theology and Philosophy. Today, Mr. Denniston will bring this wealth of intellectual, practical, and service experience to bear on the topic of the Encyclical and the market. Mr. Denniston.
Thank you, Ken. It's an honor to be here. Thanks, everybody, for showing up late in the afternoon. I look forward to your questions following my remarks and then the response. There's a book titled Progress and Poverty, written by Henry George. It addresses issues that I think will resonate with most of you. Here's an example. George describes economic prosperity that results in soaring housing prices as an immense wedge being forced not underneath society, but through society. Those who are above the point of separation are elevated, but those who are below are crushed down. An apt description of much of what we see in our community today, wouldn't you say? Here's a surprise for you. That book was written 136 years ago, in 1879, at the peak of the Gilded Age, a time of economic growth and prosperity, but also of incredible inequalities of income, wealth, and opportunity. Some have compared our current era to the Gilded Age, with Silicon Valley serving as a poster child of sorts. This reflection by Henry George from over a century ago confirms that indeed history does repeat itself. Most of the media have portrayed Pope Francis's Laudato Si as an environmental call to action. And while it's true that the encyclical addresses the world's declining environment, that's only piece of a much larger picture the Pope is painting. He also confronts social injustice and tells us we are not faced with two independent crises, one environmental, one social, but rather one integrated complex crisis which contains both environmental and social dimensions. The root cause of this common crisis, the Pope tells us, is an ethical and cultural decline worldwide, characterized by individualism and a self-centered culture of instant gratification. In Laudato Si, the Pope urges all of us to pioneer solutions which combat poverty, restore dignity to the marginalized, and protect nature. All of them, not just one. Well, you've seen that some of the coverage in the media of the encyclical has been supportive and some not. I'd like to begin my remarks today by using the adverse reactions as a prism of sorts to help us see more clearly how an alternative theology has emerged in our recent history, in our culture, and to also see more clearly the challenges of reconciling this new creed with Catholic social teaching. I'll then move on to highlight two emerging beacons of progress and hope that squarely address the injustices the Pope addresses in his encyclical. Okay, let's now peer into the side of the prism that's colored by those who have expressed an adverse reaction to Laudato Si. What do we see, both as to their particular concerns, but also more broadly, regarding their underlying belief systems? There's one particular critique I'm going to use as a proxy. It's an op-ed from the prominent journalist George Will, the headline of which is, Pope Francis, Fact-Free Flamboyance. Alliterative, yes? Right? Catches the attention in more ways than one, as follows. Will argues, the Pope doesn't understand the free market has lifted millions out of poverty. He doesn't understand that environmental damage can be fixed. And he doesn't understand that his own policy proposals will hurt the poor. At the outset, I have to say, I wonder how many critics have actually read the encyclical and not just the highlights in the newspapers. So many have mischaracterized it. Here's an example in which George Will, in frustration, lectures the Pope. Only economic growth has ever produced broad amelioration of poverty. However, if you read the encyclical, you'll discover the Pope is well aware of this fact, and in fact is even stronger on this point than Will. For the Pope marvels at the good done by inventions born of human ingenuity and enthuses we should all rejoice at the potential to reduce human suffering even more going forward. Here's another mischaracterization. Will tells us the Pope is proposing dangerous public policies that are destined to hurt the poor. Again, for those who have read Laudato Si, you'll know it's not a policy manual, and there's almost nothing in there in the way of legislative recommendations. To the contrary, the Pope explicitly says the Church is not a substitute for the political system. As far as the environment is concerned, Will basically says we should overlook fossil fuels' externalities because they've powered economic growth in the past, and in any event, it's likely we'll be able to reverse environmental damage. His proof? because London air pollution has improved since Charles Dickens' time. Will cites page 1 of Dickens' book. I'm not making this up. Bleak House. Here it is. Pope Francis offers quite a different perspective on the environment, quoting the Pontifical Council's Compendium of Catholic Social Doctrine, which teaches us the invisible hand isn't capable of adequately safeguarding the environment. That's not what it's designed to do. We shouldn't expect businesses to look out for the environment if shareholder return is their sole objective. Why would they? Here the Pope reminds us again, we're dealing with a singular crisis which is expressed in both environmental and social dimensions. And here I quote, "The mindset which leaves no room for sincere concern for the environment is the same mindset which lacks concern for the inclusion of the most vulnerable members of society. For the current model, with its emphasis on success and self-reliance, does not appear to favor an investment in efforts to help the slow, the weak, or the less talented to find opportunities in life." I have 2 takeaways from George Will's adverse reaction to Laudato Si. First, like so many critics, Will demonstrates a limited understanding of the social dimension of the encyclical. The Pope isn't saying capitalism is inherently bad. He's urging us instead to adopt a more inclusive form of capitalism. And second, with regard to the environmental dimension, Will seems unable to envision a future in which energy is both a driver of prosperity and clean. In fact, we're moving in precisely that direction today. So, what do we see when we look through the opposition side of our prism? We see a segment of our society which has come to a religious-like belief that the invisible hand of the market achieves optimal outcomes across the board: economic growth, social good, and the environment. George Will captures well the zealousness with which this new religion has taken hold when he closes his article with this: Americans cannot simultaneously honor the Pope and celebrate their nation's premises. In other words, we have before us a clash of 2 religious beliefs. On the one hand, the Catholic faith, and on the other, what one might call the Church of Market Fundamentalism. Remarkably, Will is essentially telling free marketers to disregard Catholic social teaching if and when it violates doctrine of the Church of Market Fundamentalism. Truly, a stunning conclusion to an op-ed that says so much about where our culture has gone. George Will and I can agree on one point. There does appear to be a fundamental conflict, and it's not clear how it can be resolved. Having said that, I do wish to offer one point of disagreement with George Will, and that is this: I don't believe a cornerstone of our country's founding was a belief in the near infallibility of the free market. Will and other critics try to strengthen their case by portraying Pope Francis as a radical, as an outlier, and as a pope who's making up his own catechism, and in so doing, taking the church wildly off course. That's simply not the case. In Laudato Si and otherwise, Pope Francis is channeling mainstream Catholic social doctrine through the years. Pope Paul VI in 1971, St. John Paul II in 1991, and Pope Benedict in 2007, talking about the environment, talking about social issues. And so I pose to you a question which perhaps doesn't have a clear answer. What has changed? Why the shrill reactions now to Pope Francis' social justice and environmental reflections when there was nothing of the sort when the Pope's predecessors made the very same points? Why didn't George Will pontificate on fact-free flamboyance when Popes Paul and Benedict and St. John Paul II taught the very same thing over the past quarter century? We could organize days-long seminars on this question, I think. Pope Francis points to one potential cause, which is a seismic shift in our culture to one which has become more and more dominated by individualism. I'd like to propose two other potential causes. Political extremism that has resulted in part from the hollowing out of the middle class due to globalization and automation, as well as from the self-reinforcing special interest echo chambers, which are so plentiful on digital media now because of the low cost of distribution on the internet. I'd like to turn now to two of the many tangible beacons of progress that address the social and environmental dimensions of the larger crisis Laudato Si describes. In his Encyclical, the Pope highlights an opportunity to help smallholder farmers worldwide through innovation. It turns out poor smallholder farmers are a worthy target, as 70% of the world's poor live in rural areas where agriculture is basically the only economic opportunity. Earlier this year, Bill Gates of Microsoft and the Gates Foundation tweeted this graph. The graph shows the dramatic difference in corn yields between American and corn farmers, with American farmers producing 5 times the bushel per acre compared to their African counterparts. In the industry, this is known as the yield gap. The yield gap isn't limited to corn, and it's not limited to Africa. For nearly every crop, developed country farmers will substantially outproduce their emerging country counterparts. Why is this? The main reason is developed country farmers have 2 things emerging country farmers don't: access to capital and access to the most advanced sustainable farming techniques. I serve as chairman of the board of a company called SharedX, whose business plan is to collapse the yield gap by deploying advanced sustainable farming techniques in remote areas of the emerging world. We are a for-profit company with 3 goals: financial returns for our investors, lifting thousands of poor farmers, smallholder farmers out of poverty by integrating them in the prosperity that we create, and environmental through the deployment of sustainable farming techniques. Our formula is to grow high-value specialty crops, such as organic bananas and specialty coffee, on high-potential farmland. We optimize production by bringing to these regions proven technologies that are very rarely used today. And where feasible, we sell our crops directly to end users, skipping the middlemen along the way and getting a premium price. In our mixed model, we buy mid-sized farmland from wealthy families and then engage with our smallholder farmer neighbors and share our best practices with them. Because we own our own farms, we're motivated to generate superior yields and profitability. And it's our business model innovation, the sharing of our farming and marketing expertise with our smallholder farmer neighbors, that produces impact and lifts them out of poverty. SharedX has raised investor capital, bought farms in Peru, is selling crops right now, and has shared our expertise with many poor farmers to deploy on their own farms. Here's a community of smallholder farmers located nearby one of our specialty coffee farms in the Andes Mountains. Last month, there was an international expo held in Milan, Italy. Peru's top coffee roaster was invited to come to discuss cutting-edge innovations in coffee and to bring 3 of the highest quality samples of coffee beans from the country of Peru. I'm very happy to report that one of the 3 selected varieties was grown on the 2-hectare farm owned by the fellow in the white shirt in the middle of the front row. His name is Jose. He's a smallholder farmer and has been part of the ShareDex system for 3 years now. We're so proud of Jose and so energized at the progress we've made in lifting not just the production of our smallholder collaborators, but also their quality. The company name ShareDex stands for the shared exchange of capital, know-how, and prosperity. In the summer of 2014, Pope Francis hosted a seminar in the Vatican on a trend in the financial markets called impact investing. Impact investors look to support companies that have some combination of financial, social, and environmental objectives. In other words, impact companies are not all about shareholder returns, even as they pursue strong shareholder returns. ShareDex is but one of many examples. There's a lot of momentum right now in the impact economy. A Harvard Business School professor has gone on record as saying impact investing will become the next venture capital. In a version of Back to the Future, it turns out the impact economy isn't the first time business has embraced goals other than financial profit. Following World War II, many businesses, of their own volition, came to the view their mission included generating strongholder shareholder returns, for sure, but encompassed much more. This broader corporate mission was captured well in 1951 by Frank Abrams, then the chairman of Standard Oil of New Jersey, when he offered his view that the job of management is to maintain an equitable and working balance among the claims of various directly affected interest groups, stockholders, employees, customers, and the public at large. Business managers are gaining professional status, partly because they see in their work the basic responsibility to the public that other professional men have long recognized as theirs. 5 years later, 1956, Time magazine, a general market publication, said the following: business leaders were willing to judge their actions not only from the standpoint of profit and loss on their financial results, but also of profit and loss to the community. We could hold another series of seminars on the causes of the seismic shift that's taken place in corporate missions over the past half-century. Whatever the reasons, those who today pioneer impact investing are really kindred spirits of many post-World War II business leaders, picking up where they left off. The second and final beacon of hope I'll share with you addresses the environmental dimension of Laudato Si. It's the solar power industry. Take a look at this graph. The lines towards the bottom are the levelized cost of electricity for conventional fossil fuels, oil, coal, and natural gas. Now look closer. What's that red meteor dropping out of the sky? Why, that's the cost to produce solar power. It's plummeted dramatically, as you can see. 10 years ago, solar hadn't achieved grid parity anywhere in the world. That's no longer the case. Today, solar is at grid parity in several parts of the world on an unsubsidized basis. And industry experts tell us we should expect solar costs to continue to decline with further technical innovations, thus bringing clean energy to grid parity to more and more regions of the world. On the other hand, with the exception of fracking, the cost trend for fossil fuels has gone exactly in the other direction, as the easiest to find, lowest cost deposits have already been exhausted. There are two fundamental differences between solar energy and fossil fuels. First, with solar energy, the fuel is free. We'll never need to pay for sunlight. And second, solar power generates no particulate pollution or greenhouse gas emissions. 15 years ago, the solar power industry worldwide was a $100 million market with an M, million. 15 years later today, it's a $100 billion market with a B, which is roughly the size of the global online advertising industry today. And even though solar accounts for a tiny fraction of the electricity produced today, the International Energy Agency has released studies showing how solar might become the leading source of electricity worldwide by the year 2050. I'd like to take us back once again to the Gilded Age of the late 19th century. I'm fascinated by the parallels between the Gilded Age and our world today. Back then, the country went through a profound transition from an agricultural to an industrial economy. Today, we're undergoing a radical transition into the information age. A century ago, they had their own new economy technologies in the form of electricity, steel, oil, railroads, and new technologies to produce mass products, mass numbers of products. Like us, they experienced growing global integration, rising inequality, and vast wealth accruing to a few. We had our 2007-2008 financial crisis, which led to our Great Recession, almost exactly a century earlier. They suffered through the panic of 1907, and following that, a depression. In the category of history repeats, the 1907 panic had its equivalent of our off-balance sheet subprime mortgages. Turns out that 40% of the cash deposits in New York City were held by trust organizations which represented a shadow banking vehicle on the periphery of the financial industry. When the panic hit, the trust's systemic risk became real and amplified the damage. Sound familiar? There's one final noteworthy similarity between the Gilded Age and our own time. It was in 1891, in the midst of the disruptive transformations of the Gilded Age, that the Catholic Church came forward with a foundational document to articulate its social teaching. As is the case today, that document took the form of a papal encyclical, Pope Leo XIII's Rerum Novarum. In English, that means of revolutionary change. If you're interested, it's a fascinating read. On the one hand, Pope Leo opposes communism by confirming the natural right to own property. On the other hand, he explicitly recognizes that the free operation of market forces must be tempered by moral considerations. One of the authorities Pope Leo cites in support of his social teaching was St. Thomas Aquinas, who lived in the 13th century. In one of the best-known passages, Pope Leo declared a natural right to a living wage, by which he meant an income level that provides dignity to families. We can hear echoes of Pope Leo's seminal social teaching in the later encyclicals of Popes Paul VI, John Paul II, and Benedict, and of course, Pope Francis in Laudato Si. In Laudato Si, Pope Francis is projecting mainstream social doctrine. We can trace the roots of Pope Francis' message back 124 years, and even earlier in time. Pope Francis is not an outlier, and he's not making it up. His message in Laudato Si is right within the lines, notwithstanding the efforts of critics to position him differently. I'd like to close with a reflection, almost a meditation, which Pope Francis offers towards the end of Laudato Si'. It's very good food for thought. When we ask ourselves what kind of world we want to leave behind, we are led inexorably to ask other pointed questions. What is the purpose of our life in this world? Why are we here? What is the goal of our work and all our efforts? And what need does the earth have of us? We need to see that what is at stake is our own dignity. Leaving an inhabitable planet to future generations is, first and foremost, up to us. The issue is one which dramatically affects us, for it has to do with the ultimate meaning of our earthly sojourn. Thank you very much.
John, thank you very much. Now, a response will be given by Ann Skeet, the Director of Leadership Ethics at the Markkula Center for Applied Ethics here at Santa Clara. Ann.
Thank you, David. Thank you very much, Mr. Denniston, for your comments, and thank you as well to the audience for your attention and participation in these important conversations today. Dialogue offers us the chance to think together, a fundamental activity in innovation. And in his encyclical, Pope Francis opens a dialogue quite intentionally, for dialogue involves both advocacy and inquiry, the inclusion of asking questions. John Denniston certainly can speak from an innovator's perspective in noting the possibilities market forces create. Markets at their core are a gathering of people. Successful innovation meets the needs of people, sometimes needs they can identify, and sometimes those they may not even realize they have. John notes this these shifts that he feels have clouded the exchange around our planet's condition and future. Individualism, political extremism, and realities such as the lower cost of information distribution that the internet now provides, and the echo chamber digital communication can be for those holding special interests. But special interests are someone's interests. What I welcome in Laudato Si' and the Pope's leadership overall is his willingness to reframe this issue, or set of issues, in a way that invites us to consider that all of our interests might be met because they are shared. As John has related, Pope Francis builds on the comments of previous church leaders in advancing our discussion of the planet we inhabit. Francis is moving us from language that has become associated with political views, as John identified, words like climate change and global warming, and brings us to our common home. As a student of leaders in all sectors, public, private, and nonprofit, each with their own set of market forces, I am encouraged by this shift. As John noted in his remarks, Francis is far from the first pope to bring forward environmental issues. It is how he does it that is helpful to us now. In hearkening back to the wisdom of past pontiffs, he references the words of Pope John XXIII, not about the environment, but conflict between people. John XXIII, Francis reminds us, teaches us to not only reject war, but also to offer peace. It is an important initial reference Pope Francis uses, as it is an example of the reframing of the dialogue's focus, of considering not just being against something like war, or more recently war on terror, but for something like peace. As Pope Francis works his way up through historic words to those of more recent pontiffs closer to our current day, their language is less hopeful and less about what we should move toward, with more emphasis on what we should stop doing. To me, this is the genius of Pope Francis. Pope Paul VI, as John reminded us, talks about the risk of humanity destroying nature. John Paul II, the limits of market mechanisms. Benedict says we are incapable of ensuring respect for the environment. But Francis brings us home. He reminds us that as humans we are spirit and will, but also nature. Francis uses his patron St. Francis of Assisi's Canticle of the Sun to name this encyclical, Praise be to you, and by doing so finds common ground between man and the planet, that we are nature together. As John has just reminded us, we never need to pay for sunlight, yet can use it to improve our condition. I will add that in improving our condition, humans create value. And that's another way of thinking about profit. Profits are mentioned 15 times in this dialogue that Pope Francis opens. He is asking us to consider our motivations, goals, and values when making those profits. Moving from the power of Pope Francis's chosen language, I want to comment on John's observations about impact investing and our own current Gilded Age to support and amplify John's view that markets, these gathering places of people, offer us key opportunities to care for our common home in unique, hopeful, and positive ways. Pope Francis says, we look for solutions not in technology, but in a change in humanity. Not because he does not believe technology will help us or innovation will not improve our circumstance. He is reminding us, as John has with the example of Shared X and the smallholder farmer, that our motivations matter. While Pope Francis acknowledges in the early pages of his writing in the Encyclical a retelling of Patriarch Bartholomew's litany of ways we have harmed the planet, that humans have culpability, he brings us in his words to the ethical and spiritual roots of environmental problems by pointing out that we people must change our goals in order for this technology to be used for the good of our shared nature with the earth. I would take the stories John shared today about the power of impact investing and Pope Francis's evident endorsement of this approach even further. It is not that back in the days of the Standard Oil story that John shared, that business leaders embraced a different corporate mission than exists today. Instead, I believe it is how humans approach their corporate roles that can be the most valuable innovation. Scholars today reinforce that multiple stakeholders can and should be considered in business, supporting John and Pope Francis's confidence that impact investing is a commercial opportunity to improve our shared natural condition, rather than see business or its capitalistic underpinnings as problematic. It is only problematic if the people providing leadership act in such a way to limit stakeholders served by business to narrow interests. A working paper published just 2 months ago by Robert Eccles and Tim Humans at the Harvard Business School has researched laws around the globe in search for support of shareholder primacy, the notion that corporate boards must place shareholder return as the sole interest they protect. Eccles and Humans find instead that this is ideology only, not law. Shareholder value, they contend, is an outcome of how a corporation's capital is used, not the objective of the corporation. The corporation's objective, as they define it, is to exist and thrive. It has a separate legal identity from its shareholders, directors, managers, and employees. The working paper's authors cite the work of Professor Colin Mayer of Oxford, who demonstrates that a corporation's current decisions have impact long after the tenure of the current managers and directors is over. Further, shareholders hold but a piece of a company, a part denoted by a share, not the corporation in totality. Eccles and Yeomans provide very practical applied business changes that can clarify these roles, starting with having corporate directors disclose their key audiences or stakeholders and management objectives, including the time horizon of their goals. The board must simply decide, they contend, which audiences are the most significant for the ability of the corporation to create value over the short, medium, and long term. Eccles and Humans are not just calling for more research, a typical academic paper's conclusion. They are also actively campaigning for adding a statement of material audiences to the set of corporate reports legally required to improve transparency and advance understanding of a corporation's intent and time horizon. Others in business today are trying to counter a trend in activist shareholders driving corporate decision-making for the short term by reminding corporations of their ability to consider the long term as an appropriate timeline over which to create value, a position recently and notably taken by Larry Fink at BlackRock. Mr. Fink reminds us in a letter now publicized widely in business media that a director's duty of care is to the corporation, not to individual shareholders. What does this have to do with Pope Francis and John Denniston's thoughtful reflection on how innovators in business can find common ground in caring for our common home? The work of these scholars and the comments of business influencers like Larry Fink should fuel the courage of people serving in board and management roles to think broadly about their responsibilities and to feel comfortable and right in setting goals to be realized over the long term, to serve interests beyond just those of financial investors, and to actively design the larger business system they operate within to promote ethical behavior. People with this courage, these motivations, and a fully developed understanding of what interests they are being asked to serve can use a market economy to create better opportunities to care for our planet. The Pope reminds us in Laudato Si that caring for ecosystems demands farsightedness, since no one who is looking for quick and easy profit is truly interested in their preservation. Earlier this afternoon, Professor Gretchen Daly reminded us of the value of intact ecosystems, on the ability and necessity for those in leadership positions to hold this farsightedness to protect ecosystems. It seems the Pope, the financial markets, and scholars at Stanford and Harvard can agree. St. Ignatius of Loyola, who inspires Pope Francis and those of us here at a Jesuit university, reminds us that we are all leaders, and that leadership is not a job, but a way of living. Markets are not preventing us from protecting our ecosystem. It is how people choose to lead and govern within a market economy that will make the difference. Thank you.
Thank you so much, John and Ann, for those very stimulating remarks. So we have some good time now for questions and comments. Please, if you could keep them brief and to the point. And we have some handheld microphones on two sides here. So if you please put up your hand, a student can bring the mic to you and invite you to identify yourself, and please stand up as well when you pose your question. Harrison.
My name is Harrison Price. I'm a student here at Santa Clara. John,
hold your mic a little closer, Harrison, please.
John, I wanted to ask you, when you talked about the three goals of Share X, which were profit, social, and environmental, I wanted to know how you measure those, specifically the latter two compared to profit, and what you would tell businesses that put profit over environmental and social goals.
Okay, so let me, there are two questions in there. It's very easy for us to measure our social goal, which is the incomes of the smallholder farmers that are in the Shared X network, right? We, as part of what we do with them and for them, we sell their crops. We know exactly to the penny what they're making. And so we can calculate with precision whether they've come out of poverty or not. Very easy to measure, poverty alleviation. The environmental one is, and we've talked to a lot of groups about this, more difficult, more challenging to measure precisely with a single metric or a couple of metrics. Basically, what we're doing is using precision farming 201. We don't need drones and GPS and big data, but we're being precise in the way that we're growing and treating each of the plants that we grow. And it turns out that most of those, all of those methods are sustainable because we own farms and we want them to be healthy and productive for a long period of time. So how do you measure soil health, right, over a period of time? I suppose there's a measure for that. How do you measure water efficiency? It's good for business and it's good for the environment. So it doesn't reduce to a single statistic as the poverty alleviation does. And so that's the answer to your first question. Your second question was about putting profit over social and environmental. And it turns out that the way we've designed our business is, in our opinion, our social and environmental objectives reinforce our economic, our financial objectives. Because the community where we have our farms will always have our back because we've injected the prosperity that's allowed them to send their kids from the fields to school, to build a decent home, to buy forms of transportation other than a mule, and to eat nutritious food. And we think that's good for our business. With respect to the environmental, it goes back to what I said before. We intend to own these farms for some period of time, and we want them to be productive over time, and so it is in our self-interest, our self-economic interest, to deploy sustainable farming techniques.
Ian?
It's interesting that you're bringing up. It's interesting that you're bringing up the issue of measurement, and I don't know if you happened to be here earlier during Professor Daly's remarks this afternoon, but she actually is coming up with, and there is work being done to be able to capture things like soil health and water source and those kinds of things. And in fact, the phrase that she shared with us this afternoon was gross ecosystem product as opposed to gross domestic product. So another way of measuring and putting value to those things that create and maintain a healthy environment. I also think over in the realm of the people part of the equation, which I was talking about, you're seeing measurements come through in the way that we're talking about modern business leaders. So Harvard Business Review, which puts out its annual, top 100 leaders, and used to rank them purely on financial returns, has added an ESG measurement. And that E is for environment, and the S is for social, and the G is for governance. And tried to demonstrate, I think, that there are other things to be looking at beyond profits. But the work of the two scholars that I mentioned in my comments, this statement of material accountability, which sounds so dry and so like something an accountant would actually come up with, but is really an opportunity, I think the way they're trying to have us understand it, for companies to be clear, just to be transparent about how are all the ways that they are working related, and who are the audiences is what they call it, but I would say the stakeholders that they feel responsible to, and what are they trying to do to bring returns to all of those stakeholders. And of course, then John just gave you kind of a real life example about how I think it works in the best businesses, which is that meeting the goals of some stakeholders reinforces meeting the goals of others. So as you're improving the environment, you are contributing to the profits that the company would make. And so to your question about, sort of profits over, I think we are being asked by people like Larry Fink and others to get clear about how it is we are running the businesses. What's the responsibility we're holding, as the primary responsibility. And it gives people a chance to broaden that and to include other things in that measurement.
Thank you. Yes, please.
Hi, my name is Brian Brennan. I'm a community member here. As we think about the relationship between the well-being of the poor and environmental degradation, and the well-being of the poor and markets, one thing that has struck me that I haven't heard as much about is the radical reduction in rates of extreme poverty over the last 25 years or so. And I don't know how to think about that as we think about evaluating the status quo of our global economic system, where inequality has been increasing and there have been problems with the environment. But poverty has been reduced, as I understand it, at a dramatic rate, that our goals, the UN Development Goal in terms of reduction of extreme poverty, has been met 5 years ahead of time when it was set in 1990 to reduce poverty rates by half by 2015. I'm not a specialist in these areas, but these are things I've read about, and I wondered if the speakers could comment on them.
Not specifically, because I'm not sure where you're, you mentioned the UN Development Goals, and meeting some of those earlier than the original target. But there's, data is one of those things you can use a variety of ways that you would like to use it, and you can have it make a point that you would like it to make. I think what the Encyclical and the Pope's leadership is encouraging is less concern about whose perspective is necessarily right or wrong, although he comes down very squarely with the scientists in support of the damage that the planet has already undertaken. But I would go back to the fact that he's encouraging us to engage in a dialogue and to understand what can be done. So the fact that some people have improved their condition is wonderful. I think that's exactly what we should be working for, and people are working for. And I think, again, back to some of the points John made, the best and most successful businesses recognize that. They sort of see an opportunity to help people meet a need, and they do that, and they do it well enough that they earn a profit. And that profit is the way that they have, as a measure, as I said, another way of thinking about that is the way that they have created value. So I don't know that I can directly, I'm not sure what your question directly was, to be honest, but I think there's still plenty of work to do, and we should be trying to do it together and with some urgency, I would say, particularly as it relates to the planet.
John, anything? Okay. I think we have a question over here, please.
Hello, my name is Clistasini, and I'm a Santa Clara graduate from 1968. So in listening to you, Mr. Denniston, about what your ideas were, it reminded me of the Peace Corps, which was the idea of taking technologies to other countries. Only, of course, yours is really very much with a market approach versus a government approach, which I find really interesting. And we had a previous speaker earlier today, Pancho Guevara, who spoke along with Mayor Sam Liccardo. And Pancho spoke about unintended consequences. And he gave examples of people that were displaced. He talked about displacement, which is in Laudato Si, as an impact on communities. And the example that he gave was a woman who lost her farm when the NAFTA, he didn't name the program, but it was NAFTA, was passed. And so that brought me to wondering about what kind of ethical metrics, or have you considered anything about your model, since you go in and you choose the farmers and you bring the capital, you eliminate the middleman, and you buy property. So you're really making an impact on the people in that community. And have you considered unintended consequences or metrics for how you're impacting the community as a whole? Don't get me wrong, I think what you're talking about, this focused investing, is a great idea, but I also see, based on Pancho's comments earlier, that sometimes things don't always work out for everyone in that community. Thank you.
So thank you for the question. So I've been going down to Latin America for nearly a decade. I've been out in these communities, and I can tell you right now, today, smallholder farmers are having their farms bought out from under them because they're not making it. That's the reality today. The Shared X model is intended to preserve the smallholder farmer system by creating prosperous businesses for them. That's what we do. So we're counteracting the trend that you're talking about, which is land going out from under, and once it's gone, it's gone. We have given thought to, okay, so we are injecting, our model injects prosperity into these communities, and then what? And we toyed with the idea of hiring a vice president of economic development for the area. We've rejected that notion in favor of collaborating with an NGO who's really good at it. Our core competency is agronomic and marketing, injecting prosperity, creating a very profitable business. And we're not, our core competency isn't optimization of the resulting prosperity. Our intention is to collaborate with groups that are very good at that.
First of all, I was very glad that Mayor Liccardo was part of the discussion today. And I heard in Pancho's comments just that reminder that we have to accept our responsibility as people as we set policy, and then there is unintended consequence that needs to be adjusted for. I couldn't help but think in your question and your answer, John, of a movie probably in the 70s, I don't know, called The Gods Must Be Crazy, where a Coke bottle falls out of an airplane into tribal Africa and dramatically disrupts the realities and day-to-day life of the people who find it, and for a period of time anyway, has them grapple with different values. But eventually they come back to their original core values in figuring out what to do with this magic Coke bottle. So again, I think it's we as humans must be aware and must be constantly checking back in with our values and what's important and how we want to be in community with each other, as that movie so beautifully portrayed and humorously portrayed.
Thank you.
Hi,
Questions?
yes. My name is Tayer Geta, executive turned advocate consultant, and I'm also a mentor for the social innovation ventures here. My question is around communicating and engaging others. It seems that Laudato Si is really encouraging us not just to measure the impacts of this, but really to raise the conversation to include a moral imperative. And perhaps this is mainly for John. In your work with St. Vincent de Paul, have you found the ability to be successful in engaging people who maybe are not just the mainstream of the kind of people who would donate to St. Vincent de Paul in an environment, the Silicon Valley, that's kind of notoriously difficult in terms of getting people to care about poor people? So, you know, what have you found works in terms of bringing this moral imperative, perhaps, to motivate people?
Well, the St. Vincent de Paul formula is to create encounters between people of goodwill who have means and those who don't have means. And it turns out that is a magic formula. And so in San Mateo County, where I'm president, we have 1,200 volunteers. And they're doing beautiful work every single day. So I think last year, collectively, they did 12 or 13,000 home visits, right? And so but that really is, it's one thing to sit at your desk and write a check and put it in the mail to a cause. It's quite different to engage person to person with a neighbor in need, because that has an effect not just on the neighbor in need, but also on the volunteer.
Thank you. Kirk, please. Oh, I'm sorry. Please, there, and then we'll go to Kirk. Yes.
Hi, my name is Jake Schneider. I work for the Ignatian Center here on campus. I've seen, you talked about kind of your production of gourmet premium organic coffee product and also bananas. And I've seen this kind of model also function with coffee in other locations and some of the immersion trips that we visit in Nicaragua, in Central America, and Mexico. And I'm just wondering if this kind of model is also functional in the context of kind of a general commodity market globally, more competitive market, where you know, the cost that producers are able to sell their product on is really determined by market forces, not by marketing of their product to kind of luxury consumers in the United States. For example, clothing production or general agriculture markets, where some producers are not going to be willing to kind of engage in organic practices or engage in socially responsible practices with their workers, and are therefore able to perhaps make a greater profit for themselves because of not engaging in kind of ethical practice, and whether in that case, perhaps a shift is going to have to come from the end of consumers in kind of the ethical practice that they expect from the corporations that are producing the goods that they're consuming. If you could speak to that. Thanks.
I'll just respond briefly to what you said at the end, which is there's no question that the market is demanding more and more sustainable practices across the board from companies. There's no question, especially in the younger generations. That is what's happening. And so if you look at you know, CSR, corporate social responsibility, in my opinion, I don't think it's the big companies that are at the leading front of this wave. It's the market. It's the consumers who are demanding it, and the large companies are responding to it. So that's a reflection on the last thing that you said. On the former of what you said, I don't know about closed producers and other industries, but the short answer that I'll give to your question is we selected high-value specialty crops because their profit margin profile is vastly superior to the commodity row crops, corn, wheat, rice, vastly superior. It's a better business. And it's not subject to the vagaries and fluctuations of the mass. The corn, wheat, rice are just much, much, much larger markets than specialty coffee and organic bananas. And there's also a shift in consumer demand from the row crops to the specialty crops because of globalization. Globalization has translated into a surging middle class that at the beginning of this century, year 2000, was 1 billion people. 15 years later now, it's 1.8 billion people. And in the next 15 years, demographers are telling us it's going to go from 1.8 to 4 or 5 billion people. It's the most momentous demographic event in human history, and the implication for Shared X is that when a family graduates from poverty to the middle class, it doesn't want to have rice and beans for their meal twice a day. They might want to have a cup of coffee in the morning and a chocolate dessert in the evening every once in a while. And so it's caused a surge in demand and therefore pricing for high-value specialty crops, as there's a shift from one to the other. And the handwriting's on the wall, just given the direction of globalization in the middle class going forward.
Thank you. Kirk, please.
First, I want to thank John for really a very articulate statement about I'm Kirk Hansen, Executive Director of the Markkula Center for Applied Ethics, and a business professor. The challenge, I think your statement about this being a theology, an alternative theology of the free market is a really important point to bring out, that the evidence is much more cloudy about what kind of a free market, what kind of a controlled free market might produce better outcomes. But it is nonetheless a very strong theology, and it's embodied in our institutions. So my question is, how do you talk to people like George Will or the executives in Silicon Valley firms that have totally bought into the short-term return, shareholder-only concern that is the way corporations are governed? Large firms in Silicon Valley seem to me to be governed either by that philosophy that their role as board members or as managers is to produce quarterly returns for the shareholders and not worry about the kind of long-term social benefit that you're talking about. Or they are founders of Silicon Valley startups who frankly don't even think of their organizations as firms. They think of them as investment vehicles that have a life of 5 years before they sell out to Google or Cisco or somebody else. And therefore, they're concerned not with any of these long-term things, but only with pumping up the value over a short period of time. So those are the people I think we've got to talk to and convince the broader perspective. A leader like you that is basically starting up something new can be engaged, I'm going to take the cynical view, can be engaged in shared value kind of investing and social impact investing. But the professional manager or the professional director can't do what you're doing. And they're bound in institutions that require short-term profits. Now, maybe in Kleiner Perkins, you succeeded in convincing your partners that indeed there should be a long-term, but most venture capital funds are shorter term. They may be 5 or 10 years at maximum, but that still doesn't give much room for the kind of social impact you're concerned with. So how do you talk to George Will, or maybe how do you talk to your partners at Kleiner Perkins?
Very carefully. So let me just give you, so thank you for the reflections and your insights. Let me recommend 2 books that I think you'd find very interesting, and others as well. One is called The Shareholder Value Myth. The author is Lynn Stout, who's a law professor at Cornell University, and what she basically says is that our market economy has become a victim of short-termism, like you say. And that's because, she says, that the singular metric against which public companies are judged right now is their daily, weekly, quarterly stock price. Short-termism. One of Kleiner Perkins' portfolio companies is Google. And when Google went public, it said, we're not going to give quarterly guidance. We're not going to buy into short-termism. If you don't want to buy in the public offering, that's okay. And there's a little bit of a movement. I mean, Google had the market power to put its fist down and say, this is the way we're going to conduct business. We're here for the long term. But one of the points that this book makes is, okay, well, this is about shareholder return, but does that mean shareholder return next quarter? Or 3 years from now? Or 10 years from now? Or what? Right? Because if it's next quarter, it will dictate a certain set of actions that probably involve cost cuts, maybe to research and development. Well, if you cut R&D, that has implications 5 or 10 years in the future. So it's shareholder value when? And what the market's decided is now. And so hedge funds and active trading, there's a statistic where back in 1970, plus or minus, the S&P 500 would turn over, that is, be traded, 12% would trade in a year, okay? In the year 2010, 2012, it turned over 300%. The internet explains some of that. But the point this book makes is that's not healthy. And actually, returns have gone down. Returns have reduced. There are a lot of reasons that can happen. It's not just the short-termism. But the short-termism, she argues, is against the interest of shareholders. So by declaring a metric of shareholder value, which means short-term value, shareholder value declines, paradoxically. Okay? The second book that I'll recommend to you is one called Saving Capitalism. The author is Robert Reich, who's the former Secretary of Labor. And the point that he makes basically in his book is the free market isn't of nature. It's a creation of the government through corporate laws and bankruptcy laws and the SEC and so forth. And so all of that is subject to bias and influence, and there's not one flavor of capitalism. It's really a similar point that the Pope is making. And in fact, the form of capitalism has migrated over time. That's more of a theoretical book, but they're both very, very interesting. So those are my reflections responding to yours.
I would just add the Larry Fink. Have you read the Larry Fink letter? So I think Larry, he's making similar points that John just made and that these other scholars have documented in reminding people that they're not mutually exclusive. And in fact, that the duty to the corporation as a whole and over the long term will bring healthier returns to shareholders, but that's not who the duty of care is owed to. And I think it's interesting that we sort of have some of these things coming together at the same time that this document has come out, that others are starting to feel, as I sort of, emboldened to say, well, it's okay to care about something else. And in fact, these things can reinforce each other.
Thank you. Any other questions? Sean.
Hi, my name's Sean, and I'm a student here. I had a question. The Encyclical, Pope Francis talks about how and Dr. Sundstrom talked about this earlier, about how some market-based ways of bringing about change are too slow to bring about the change at the rate that we need it. You talked in your address about how with a growing middle class we'll have changing values. Do you see some sort of market-based solution acting fast enough to bring about the change we need in time? Or do you think we're going to need something more radical than that, I guess?
Sean, you're speaking of change in time in light of the advance of climate change? Okay.
Go ahead.
She's a faster thinker than I Climate change, my own opinion is we're behind. And the market, like I mentioned, I think the Pope says this in the Encyclical, the market's not geared to respond. It's the tragedy that commons. It's not geared to respond to environmental crises. That's just because there's no price signal in it. The market responds to price signals. And so we're adrift. And so people have toyed with the idea of putting a price on carbon or trading regimes and so forth. But fundamentally, there's got to be political agreement on it because, and so if the political agreement is to integrate into the market a price signal, great. A lot of people think that's the right solution, but it's not going to happen on its own. The market can't do that of its own. It's the same point Robert Reich is making in his book, Saving Capitalism, which is the free market is a creation of the political system.
I would say it's a creation of people, and so people can adjust to it. I also think some of the issue is that while there may not have been ownership of the common good previously, there was more trust in government to look out for the interests that are represented in those common and public goods. And I think we have lost a fair amount of trust, at least in this country, and in other countries that they haven't achieved it yet. And that's that's one of those things that we haven't been measuring or putting a value to, and maybe should be equally considered and measured and attempt to put a value to how that is eroding our ability to protect those common goods, because we're not finding the political will to get it done.
Actually, a question for John also. I'd like to echo Kirk. I thought your description was really spot on and very insightful about this response, the Church of Market Fundamentalism, to Pope Francis's comment. And especially striking to me was your articulation when you say sort of what's changed. And generally when this issue is engaged, the argument is, as you note, the papacy has changed. The arguments there have changed. And I think your comment that really what's changed is our culture has changed in terms of this conviction of an individualism, this market fundamentalism that we've fallen into. And I was just thinking of, really just the intense opposition in Washington and elsewhere, and the tons of corporate money going into fighting all kinds of issues related to Laudato Si, climate change and others. Could you elaborate a little more, on what you think is behind that, and maybe as others have sort of raised, and how to respond more fully to just the intensity of the opposition?
So it's like all of you do, having conversations with people on these topics, if people are on opposite ends, it's very difficult. It's almost a Tower of Babel, really, that there's just not even comprehension of what the other side is thinking. And so I think it's very difficult. And the question is, why is that? Because I don't think it was always that way. And again, one of the ideas that I offered up, a thesis, is that middle-class wages has basically been flat or declined over the past 30 or 40 years. That's never before happened in American history, where the younger generation can look at their parents now for the first time and say, I'm probably not going to do as well as you did, financially, economically, right? And so I think there's a level of concern and fear, and in both cases, I think, on the right, the Tea Party, and on the left, use Occupy Wall Street as a proxy, they're both blaming the government, right? And the Tea Party says the government is the problem, they're doing too much, and Occupy Wall Street is saying the government's the problem, they're not doing enough. But really, I think that the main cause of the changing American economy is globalization, that is the spread of wealth and opportunity around the world, and automation, which displaces jobs. And that is, it goes back to the Gilded Age, and that it's very, very, very disruptive, and it has made fundamental changes in the American economy.
And any there? I thought I might follow up with one last question here. to close, because I thought it was fascinating hearing this from you, John, with your experience at Kleiner Perkins, and saying that you really thought that impact investing could be the venture capital of the future. And I wonder if you might elaborate on that. That's a very strong statement about an institution like venture capital that's just become such a mainstay of our economy. And I wonder if you could just talk a little more about why you think that.
Well, that was a quote from a Harvard professor. That's not my idea, and that's, I don't know. I think that's looking far into the future. What I can tell you is that the impact investing market is growing very, very, very rapidly. And it's, I mean, I'll give you an example. I was at a conference earlier this year, and Howard Schultz, the CEO of Starbucks, got up and announced that Starbucks is setting aside $250 million to pay for the college education of any employee who wants to get a college degree, of their employees. Why would a major publicly traded corporation do that? And Howard Schultz was asked that question. His answer was, it's good for business because we expect we'll have stronger employee loyalty. People are free to leave whenever they want, but we think our employees will appreciate that and there will be more loyalty, and we think our customers will be attracted to that. And so it goes back to the comments that I made earlier, is we've constructed our business at SharedX in a way that the social and the environmental make our financial business better and stronger. And so I think there are an increasing number of companies that are coming to that realization. Google is an impact company. If you look at what they're doing in Alphabet, so much of it is positive impact on the world as they're making money. And so I can give you example after example after example. It's just not called an impact. Google, no one calls Google an impact company, but in part it is. Nobody calls Starbucks an impact company, but I've just given you an example, right, which 10 years ago would be unthinkable.
And I think, just to say why I think it will be attractive here, David, is people are attracted to Silicon Valley for a number of things, partly to be around other people who are trying to innovate and sort of that creative juice and mojo that they want to be around. But also it is still identified for people that come from other countries and other parts of this country as a place where you still can change your economic position. You know, you might be able to do better than your parents did if you create something that adds enough value and are successful enough to move up the ladder, if you will. And so impact investing brings those two things together in sort of a pay-it-forward way. So not only are they going to be doing that for themselves and making their own profits in the work that they do, but then they can see that they're offering other people the opportunity to do that. And I think that will appeal quite a bit to people who happen to be in Silicon Valley. So I don't know if the Harvard professor was speaking more broadly, but I can definitely see that it will be, and already is. We see it here with some of the work that happens at the Miller Center and in other ways that people are choosing to invest their time and money in the community.
Thank you. Please join me in thanking John Denniston and Ann Skeet for their wonderful presentations.